On a long-term basis, number go up. So I'm not fussed about that. The path is interesting. I think it's going to be defined by how BlackRock define Ethereum. Right? You and I have been in the space for too long. We know what Ethereum is to us. We know what it is. We know how it positions versus other smart contracts. We know the breadth and depth of the Ethereum ecosystem and how good it is. We know its failures. But here's a bunch of people coming into the space, call them RIAs, and they need a sales pitch. And they've been given, here's a cryptocurrency, it's Bitcoin. It's kind of your life raft, it's digital gold. Okay, they bought that. So BlackRock are not stupid. They have no interest in going to sell, oh, here's another cryptocurrency, which would fail. So I'm really interested in the narrative they craft. Because this has I think has a potential to change the entire crypto space. That's how big this ETF is. And not necessarily from a flows perspective, I'm sure it'll decline over time, but more from what is the narrative of the space. And my guess is we're going to build the world on we're going to tokenize the world.
The upcoming crypto bull cycle of 2024 and 2025 is poised to hinge significantly on institutional adoption, with BlackRock emerging as a pivotal player. Recently, the SEC's approval of spot Ethereum ETFs, including one from BlackRock among 8 others, marks a pivotal moment. Raoul Pal, in a recent interview with investors, dissected BlackRock's strategic move, suggesting that their push for an Ethereum ETF is aimed at advancing a narrative of global tokenization. This narrative, spearheaded by BlackRock and Larry Fink, could potentially revolutionize the entire crypto landscape by mainstreaming digital assets in unprecedented ways. Pal's insights extend beyond BlackRock's actions to discuss broader implications for the crypto market. He outlines his own exit strategy in crypto investments and articulates why he believes a bullish market trend is inevitable. For those eager to delve deeper into these discussions, both Raoul Pal's The Journeyman channel and the Investors channel offer comprehensive insights, accessible via the links provided in the description. As we navigate through these transformative times in the crypto sphere, understanding the motivations behind institutional involvement and strategic moves like BlackRock's Ethereum ETF approval becomes crucial. Pal's analysis not only sheds light on these developments but also underscores the potential for significant shifts in how cryptocurrencies are perceived and integrated into global financial ecosystems.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Because this has I think has a potential to change the entire crypto space. That's how big this ETF is. And not necessarily from a flows perspective, I'm sure it'll decline over time, but more from what is the narrative of the space. And my guess is we're going to build the world on we're going to tokenize the world. And Ethereum is the platform to do it. And if they sell that, and we know the finance, every single investment bank has been building teams internally for years and years. ETH now gets regulatory clarity. There's going to be a raft of product coming out of finance.
Oh yeah, and Larry is clever enough to know that his existing system is archaic, and it needs a revolution to spice it up. And the world will be tokenized. There's no doubt about that, and he sees that.
It's the settlement layer that interests them the most, and the fact that you can then build layer 2s. So here's something really interesting. Most people don't realize. I was in Switzerland speaking to one of the investors in the asset management company, and she's one of the senior traders for Louis Dreyfus, the commodity trading house. She trades ags, soft commodities. And I'm like, well, you're investing off my fund. I'm surprised you guys don't use it internally, like stablecoins internally, because you've got operations in Angola and wherever, everywhere in the world, and you need to move money around. She goes, yeah, we do some of that stuff. But all of the agricultural commodity trading houses built a blockchain on top of Ethereum 4 years ago. I'm like, what? She goes, oh yeah, all our letters of credit, our shipping, our quality standards, this is this crop and this, all of that. It's already on blockchain. We use this in this instant efficiency. I'm like, huh. So if you think about that, what you've got is the settlement layer, the database, the super secure database that is ETH. The speed and everything of that bit, we've kind of proven with the layer 2s or layer 3s, doesn't matter as long as the settlement layer is there.
And they can wait 15 minutes. compared to the
because it
previous
doesn't-
world.
compared to the finance system.
Yeah,
So
T
for
plus
them,
2.
yeah, T+2 at best, you
Yeah.
know. So I think for them it's actually perfect. And what we find confusing with the endless layers will make total sense to them, because they can create their own layer, settlement layer for equities, let's call it, and it can settle at the ETH layer. Okay, that's a big fucking deal. Things that are earlier in the adoption curve, but with proven adoption, go up faster in price. I literally don't care whether it's Solana or some new thing, but it has to be at this point in the adoption curve, right? There was Solana, Avalanche, Luna, and Polygon that were the four runners. One went to zero, and Solana rose fastest out of the ashes. Like you, I was buying in June 2022, and really went max long as we went. So I saw the network effects were superior early, and I said, this is probably the bet, like Ethereum was in the last cycle. And then I'm a simpleton. I just use the charts and look at the ETH Bitcoin cross, the ETH Solana cross, and Solana was breaking out. I'm like, okay, that's as simple as that. So it's not, I leave the narrative as something I can discuss and debate, but really the proof is in the simplest of metrics. And we will see in this cycle a bunch, 3, 4 new protocols, new layer ones that will do really well and outperform Sol. They will all go down 99% or 98% or 97% in the next cycle, and one of those will be anointed too. We've seen this with memes. Doge has survived. And out of these memes that are around now, whether it's Pepe or whether it's Whiff or whatever, Bonk or whatever it is, one of these will be crowned the survivor for the next time around. And so I just observe these kind of patterns.
Yeah, it's funny because when I take into account things like the Lindy effect, that doesn't really apply to crypto. Certain things do stand the test of time, but they don't grow. Certain things stand the test of time and hang tough, and certain things just get killed over the cycle.
So here's how I think about those. When I look at using Metcalfe's law in crypto, it's a two-sided equation. One is the kind of number of active users, call it that, and the other is amount of activity on the network, which I think you can capture by value exchange in dollar terms, right? And those two seem to explain most price, and price is pretty much correct in crypto. So when you think about Doge, it is a one-sided ecosystem. It is just retail investors and a whale called Elon Musk that holds $3 billion of it. And it's maintained its value because people have stayed with the meme, because it made people wealth, real wealth. And they stick with it. They're loyal to it. Now, if Elon uses it for X, which I think he will, well, you're going to create an extreme jump in value from this thing at some point. Many of them that die lose the retail investor because they don't have an actual community. Cardano, I know we're going to get hated for saying this, Cardano is more held by retail community. But they're loyal to it, which is why it maintains its value, even though the applications haven't scaled in the way that the community would have liked it to have been. And it's true with many of these ecosystems. It's the ones that fail to actually keep the retail or fail to get... XRP is another interesting one because it actually has quite a few applications, but there are lots of small microtransactions, so it doesn't create as much value, but there's a lot of retail and it kind of balances it out. So I just think of them really simply in these terms.
But you wouldn't own XRP. The 8 years of perpetual inflation. I don't understand that at all. I bought XRP in December 20 when it got delisted, because when something gets delisted and pukes so much, I was like, there's real network activity, but I'm not going to own it based on my thesis. I've got some in my wallet that's left over, but it's not a position, because it doesn't have the provable network growth. Now, good luck to them if they manage to do it. Fabulous for them. I'll be an investor, but until it's proven, I won't be. Everybody has PTSD because the last cycle was stunted.
for whatever reason. It started earlier, more aggressive because of what happened with the 2020 shenanigans, and then the FTX. It was more stunted. That's what my view is, and it caught many of us by surprise. Would I have done anything different? No, I wouldn't have sold a penny anyway. So it was not in my thesis. I have a long-term thesis. Jeff Bezos is the richest man in the world, not because he fucking traded his stock. It's because he didn't trade his stock, right? I know it's antithetical for most people, but it is really the way to get rich, is just do nothing. But we all live in the real world, and we want to cash in some lifestyle chips, and we want to, make sure that we feel like we've achieved something out of all of the hard work that we've put in. So my view is I'm just going to use time. Somewhere towards the end of this year, I'll take a third off. Then I don't give a shit. And then if we have a super cycle, I'll take another chunk off. But I don't know what to do with that money. I don't really need to do anything else. So let's just sit in cash and wait for a bear market and hope it happens. God forbid if it doesn't happen, but at least I'll get some exposure. This is why, if you can avoid trying to do too much, in 7 years' time, you will thank yourself for not having done it. I've done both. I've sold out in 2017. The other thing is, let's say your $1,000 is now worth $1 million, and you sell out and you nail the high. You're within 20% of the high. Brilliant. Market collapses down 90%. You will not put your $1 million back in. You can't do it. Even though it's de-risked, nobody can do that. And so which case you will under-allocate compared to what you would have had. It's weird. The psychology of investing, particularly when this is a high-stakes game, we've all got lots of our net worth tied up in these bets. The psychology of investing is really hard. So I don't know. We also build out models in the macro investing tool, GMI, everything else, around the timing, because we need to do it for the asset management firm to a certain extent. But me personally, I'm trying not to fret that noise, but just give people the tools to understand it themselves. I don't think the perpetual money machine overcomes cyclicality. Liquidity in, liquidity out. I don't think you can avoid it. So it's such a dominant force that if the Fed have to, and the other central banks have to reduce liquidity at the end of the cycle, which they almost always do, it will hit the assets. But the point being is, I don't believe they're going to gift us the chance yet again to buy an asset down 90% and give us a 30 or 40x return every time we go back to the casino. I mean, it's hilarious, the opportunity they've given us. And if you've taken it, it's made enormous life-changing profit. That's my biggest fear, is the damn thing goes down 40% and we're all caught offside waiting for the last leg and we don't get it. That's a bigger fear. It's not, and this is why I don't want to be trapped out of the market either. A lot of people fear getting trapped in the market. My fear is being trapped out of the market. This is the largest wealth-generating machine humanity's ever been given. For most of the liquidity formula, it matters not about rate cuts. Cast your mind back, 1994, the bond market blew up. Similar, not less extreme, but it was very extreme at the time. Everyone thought we were going to get a recession in 95, 96. We didn't, we skirted it. And what happened was the Fed cut once or twice, 25 basis points, 50 basis points, and then didn't do anything until 1998 in the Asian crisis. The NASDAQ went up 170% in that period. You just need stability. You don't need, .com, we've got the same backdrop that, of AI and everything else. You don't need rate cuts. You need liquidity and you need stability. And even if liquidity stays the same, but you have stability, it gives people the ability to take risk. So I'm not worried about it. I don't think anybody knows how it plays out, but I know that Europe has to and will cut rates. The UK has to and will cut rates. China has to and will cut rates. And if they're not careful, the dollar's too strong. So the US has to do something about it. So the only answer is liquidity. And let's say by not doing something, they torch commercial real estate, which is going to happen anyway, right? It's a slow death or an instant death, whatever way. The answer is always more cowbell. So whatever happens, the answer will always be more liquidity, which is why this is the most lopsided, asymmetric, macro risk-taking environment in all history.
Raoul Pal's insights into institutional adoption, particularly through influential entities like BlackRock, highlight a transformative phase for the crypto industry. As these giants embrace digital assets, the landscape of cryptocurrency stands to undergo significant evolution. Pal's perspectives underscore the importance of staying informed about how institutional players are shaping the market, offering a strategic edge to those keenly observing the unfolding dynamics of the upcoming bull cycle. For investors and enthusiasts alike, comprehending the strategic moves and narratives of major institutional players such as BlackRock provides valuable foresight. Pal's analysis not only illuminates the potential impact of institutional adoption on crypto prices and market trends, but also emphasizes the strategic advantage of anticipating and aligning with these influential shifts in the financial landscape. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.